Well, good morning, everyone, and welcome to the pre-market rundown for Friday, March 18th, 2021. I'm Andrew Horowitz, and I am the co-founder of TriggerCharts. Thank you so much for being with us today. I don't know what just happened, but we just saw the NASDAQ flip. It's just 9 o'clock. Everything went to hell all of a sudden, dropping down very significantly. Pretty ugly move right there off of the highs. You see this move that's starting to pick up a little bit. I'm not sure exactly what the news is. We'll find out a little later, but we do know that markets have been extremely volatile of late. We know the fact that we've seen that there has been a significant amount of drawdown. I mean, look at these moves all of a sudden. I'm not sure what's happening. Even Bitcoin selling off this morning all of a sudden. There must be some move on the rates. We'll look at that a little bit. Anyway, let's talk about what's going on. Of course, we know that with regard, man, look at how fast things are moving. Pretty good, huh? Pretty significant volatility there. Let's just do our disclaimers real quick that investing involves a great deal of risk. Anything that we talk about today is just educational for educational purposes. It is not an offer to buy any security, etc. Everybody can hear me okay, by the way? We had some problems with our sound the last couple of weeks, but it seems to resolve. We fixed a couple of settings. Just give me a kickback in the chat. Yep. All right. Thank you very much. All right. So let's talk about what's going on. First of all, I guess we could say that in terms of the Fed, he tried. Federal Reserve Chairman Powell came out and tried to bring down rates a little bit and try to really cause a significant amount of, let's see, we got something here. The Fed will not extend a pandemic rule that allowed banks to relax capital assets. Okay, so they're kind of not extending some bank asset issues, and that's what kind of caused some problems here. It looks like right now, maybe signaling that there are bigger issues on that right now. But anyway, we'll see how this plays out. If it's just a quick move, a knee-jerk reaction by the algos right now as things are moving. Anyway, as I was mentioning, the Fed has come in and tried to calm down markets with the idea that rates are on the move. It's all about the rate. That is what has been going on right now. We talked about this several times, the idea that there is a significant amount of correlation lately to the fact that we saw rates on the 10-year, for example, move up from, 1% to 1.7% or so yesterday. And that's causing some consternation when it comes to the markets, because as we talked about, I'm not going to get into the details and all of this, but the bottom line is what we talked about was that there was this concern about how you value an asset. And when we look at a growth asset, when we look at the technology and healthcare or those Momo names, what you have is a situation where there is a discount mechanism, the risk-free rate of return, and that risk-free rate of return is something that you put into a calculation using the capital asset pricing model, all of that. And bottom line is when you see that fundamental analysts say, hey, wait a minute, wait a second. There is a mismatch here with what the valuations are compared to what a risk-free rate of return is. If you can get 1.7% on a bond versus 1%, well, maybe it makes more sense to be in a bond. So right now, the 10-year at 1.75% is a big concern in the markets. And as we see that rate fluctuate, it is starting to really play some significant havoc on markets. What's really interesting is just to look at what we're looking at the right-hand side of the screen here. You would venture to say that right now we have seen a very significant drawdown from the Qs or the NASDAQ 100 from, what is this, levels of about 337. Yesterday, about 311, very close to that significant amount of the point of control right there. Level about 310. We looked at about a 308 as a level, still up from where it was at that drop down low at 297 or so. But what's interesting to note is that right now we have a situation where clearly there has been some weakness, more so in the NASDAQ versus, we'll say non-NASDAQ. We'll say the areas of the market like the banks, the financials, the energy stocks have been leading dramatically over the last year. Small cap in particular, if you've been on that small cap train, which is signaled out some time ago that it was a great buying opportunity, there was some opportunity there. Now that we have all of a sudden this rate increase and the spread of the 2s and 10s or the yield curve steepening, it's very good for certain companies. It's very good for the area of, in particular, financials. Now you have on top of that the reopening trade and all that, and we have this great combination of what's going on right now is the fact that we are seeing a significant amount of interest in the opposite trade of what we saw last year, completely opposite. In fact, let's see if I can bring this up if I have this on here. Do I have the rotation? Yeah. So I wonder if I have this on here. This is just a simple look at QQQ and let's say DIA. So when I look at this, that the DIA year to date is up 7%, and the tech sector in terms of the Qs down today for the year to date. You can see that right there. When you look at things like the IWF growth, which is down 1.3% for the year, and I think we have the IWD up 10% for the year. So take a look at that. Let's bring this down here for you. Did I do it? No. Here. Okay, so the Russell 1000 growth is right here, down 1.3% for the year, and the Russell value is up 10%, 10.8% for the year. That's a pretty significant spread. Now remember something, last year that spread was exactly reversed. So the play this year so far, as of now, with the rates moving higher, has been all about the financials and the banks, etc. We're seeing that play out here in the Qs very substantially. But we do have massive stimulus. We have low rates, generally speaking. We have calm inflation. These are all things that the Fed wants, what they talked about that they will really like. And what is really interesting is that they want it all. They want to kind of have their cake and eat it too. They want to have, hey, we're going to keep rates low. We're going to keep on pushing on the Congress to push out more stimulus in terms of fiscal stimulus, money in our pockets, the $1,400 checks, infrastructure spending, and we are going to support that with the lowest rates possible. Some of the rates have gotten away from them, but they are going to be very supportive of that. What's really interesting with that is that they also think that, well, we don't really care about inflation. Let inflation run hot. We want the economy to come back very strong. We want employment to come back very strong. And they want to kind of have both sides. They want to have the ability to have massive stimulus, lower rates, and inflation that nobody worries about. The problem is, starting next month in particular, that the inflation numbers are going to be representative of a year ago. So when we look at year-over-year numbers as the important levels, which will be discounted by the Fed, they'll say it's an anomaly, it's transitory, it's coming from a low base. We are going to see inflation start to kick up just because of the statistical mechanism that how it is calculated is going to show up very substantially starting about next month and the month after. Because when we look back a year ago, when we saw that big drop, right, we saw that massive move of inflation down on a year ago basis. What is happening is that we are seeing that when we take all those numbers, it's going to be a massive move to the upside. Like we saw, for example, with all these other numbers like GDP. GDP is expected to be 9% for the quarter, and on a year-over-year basis, it's going to be up very substantially starting next quarter because we had that big drop in March of the quarter, February, March, April of last year. Now, when we compare that on a year-over-year basis, it's going to show us a very significant upside. Is it real? Well, of course it's real. I mean, just as real as the drop was real. But remember, we have to look at it and anchor it to what we're comparing it to, and that's what's going to be the big issue right now. Big question is whether or not these reopening trades, the big banks, the energy, maybe the airlines, possibly the cruise lines, have gone too far too fast. That's a big issue that really is a question right now. We are seeing a catch-up trade that's gone on, but the trend clearly is in favor of the area of banks, financials, staples for that matter, the stocks that really did not participate in the upside last year, energy too. Well, themes, clearly a divergence, right? The divergence is that large to small beating out large significantly. The smaller the stocks that have been, even though the last few weeks have been wonky for them, fact is they're doing pretty well. Then on top of it, you look at the divergence of value versus growth. Very big issue. Rates are really what it's all about. The concern about the Fed, how liquid they're gonna continue to liquefy markets, etc. One of the things that I really want to focus on today is the idea of support and resistance, because what we're finding is that these have become really significant, more so than I've seen in a while, where you look at key levels of support resistance. Sell the rips, buy the dips kind of concept has been playing out really well. And when you see that there are over, I would say that, a break of support moving into levels have been quickly snapped back. Even this week, let's go back to this for a second. Where do I want to find that? Here. Even this week, look at a 5-day. We're down 1% on the Qs. I mean, it feels a lot worse. We saw a 3% move down yesterday. We saw, a 2% move up a couple of days ago. But things are moving very, very quickly, and it's interesting. It feels a lot worse than it really is. At the same time, you look at the DIA, which is the Dow Jones Industrial, 5 days up. SPY is probably flat to down a little bit. Yeah, down a little bit for 5 days. But again, it feels a lot worse because of all the volatility. That volatility is not going to be your friend if, in fact, you are going to be holding very weakly. In other words, if you don't have commitment to something and you don't feel that you're comfortable with it, it's going to blow you out of positions. Whether you're on the long side or the short side, both have been problematic. Because on the short side, you get into something, it moves in your direction, then one day later, there's a face-ripping rally that happens. And then we see what we saw this morning. You're watching the top line here of where we are in the Qs and the SPs and the SPOOs, if you will, and the Dow. We're seeing, the Dow is not that much off from where it was, up 20 points or so. Qs are up like 45. We saw them just a minute ago dip down, then come back harder. Those kind of whipsawing actions are very problematic when it comes to trying to hold on through an overnight hold if you're a swing trader. All right, the KRI indicator has been at a +4. Where is it now? It dropped down a little bit. We're seeing that's a +2 right now. But we did see this right here, which was, let's bring out the annotation tool so I can do some circling and all that good stuff. Let's change the color today. We're going to use pink today. So we noticed in the past we've had these clusters that are formed when we see the top line. We got one little one here. There was one right here that disappeared. So it closed and it resolved itself to have no cluster. But we did see that there was a +4 reading. Now, you see those in the past. These are when it starts getting hot. And when you see that there is a continuation, if it did stay in this level here, and we did see that it kept on moving higher, and let me add one more thing, that we did see some clusters forming here, inside of here, right? More of these little dots that happen. That would make me more concerned. Right now, we're kind of in the middle, and that is concerning on its own, because right now we're in no man's land, or no person's land, as we say it these days, with regard to the market. So I think that, do we have a shot to get back down to, I'm just going to look at some basic levels here, 388 on the SPY from where we are, 391, possibly. Could we see this resolve back up a little bit higher? Possibly. There is still a very significant bid in the markets, again, with the Qs being the weaker side of this right now. And that's because of rates. Again, the rate issue has just been overwhelming a lot of people. Economics, we saw that retail sales fell, but of course that was because we saw a 7.6% adjustment, or let me say it again. There was an adjustment that yielded a 7.6% overall retail sales, up from about 5.5 or so in the month of February. So it's no surprise that the next month was not that strong. Housing was weaker. Crude, we saw a build. Big day on the downside for crude yesterday. Initial claims were 770, so not going in the right direction. However, some of this is predicated on the fact that we are doing comparisons over month, etc. So I'm not really that concerned with some of these numbers. The numbers have been generally good, a little choppy right now. Probably going to see a pickup in retail sales next month or the month after as people are getting their stimulus checks. That's a big issue. What else do we got here? Coming up next week, existing home sales, third revision of GDP, durable goods, personal income spending, and PCE prices. PCE prices are personal consumption expenditures. That is probably the number one looked at metric by the Fed to look at inflation, even though we know they don't care about it. Now, it's interesting to note, let me just go back to this because I think it bears some explaining. What happened and why did we see a spike in interest rates yesterday after the Fed calmed them down the day before? And I think the reason for that is pretty basic, and that is that when we look at the commentary of what they had, that talking about how they're going to let the economy run hot, there was a realization a day later that while the Fed is going to continue with the $120 billion monthly purchases of bonds through the quantitative easing program, that there at the same time is no concern about when they're going to stop. They talked about, well, the dot plot, don't look at it, which is the assumptions of various Fed chairs around the country or Fed presidents around the country, what they think and when they think interest rates will rise. He said pretty much discount that. Well, putting that all together was like, hey, that's great. They're going to keep the pedal to the metal for really a very long period of time. However, it also started to make people think, maybe that's going to really significantly boost inflation, and we don't want to be in the way of that. Now, you got to think of that two ways. If the Fed doesn't care about inflation, are they going to care about, valuations that much? Well, yeah, they want market stability, of course. If the Fed's not going to care about inflation, are we necessarily going to get inflation? Well, maybe, maybe not. Again, these next metrics that we're going to see very shortly are going to be very telling, but yet not absolute. So I would bear on the side of probably seeing some inflation kick up. I don't think it will be out of control right now. However, I think it's also really smart to have some inflation protection in your portfolio overall, and that's through things like whether you want to do it through Bitcoin, whether you want to do it in theory through gold or silver, tips, other assets. Very smart to do. All right, we're going to talk about some of the SPACs. WSM had a great day yesterday. We have that in some portfolios for clients. LAZR came out with earnings today. LiDAR company FedEx, also a Nike with earnings. ROBX came out with the IPO this week, kind of a very successful one. And some of the other ones we'll talk about. Plus, Palantir. Palantir. I always forget the Palantir. What's the symbol on Palantir? I always get that mixed up with Daily Planet Fitness. Joel asked me about Palantir. Put your symbols in here. I want to mention also while we're doing this and while we're setting this up, that everything that we talk about here is available on a 10-day free trial over at the Trading App Store for TradeStation. By the way, this week, coming up on the Disciplined Investor podcast, the president of TradeStation is going to be my guest. So make sure to, if you like podcasts, you listen to podcasts, you got to be listening to the Disciplined Investor podcast. So again, let me just throw this out. Palantir, I'll look it up this way. You push the space bar, by the way, like that. I don't know why I can't. I have like a mental block. Palantir. There we go. Somebody asked about Palantir. We'll just get to this real quickly, and we're going to get to some of yours also. If you put them in the chat box right there, because we want to look at yours. We'll look at some of the ones I came up with as well. Palantir, interesting right now. It's just kind of looking like it's consolidating. Again, always use things like your box tool. I'm going to put this in here also. PLTR, enter. It will take a second to load. And it's loaded. So we have nothing because this hasn't been around that long. Stock's honestly only been around for a few months. Let's make sure this is set up daily 30. Good. All right, so we're seeing a short alert. This is our trade bias right here on the daily, which coincides with the yellow bar that we have right here. See that yellow bar that is holding right here. Momentum starting to come down on this a little bit. Obviously stuck in the tech world that has not been very successful. That big up we saw when everything was kind of going out of control. But I mean, a really significant consolidation. Now, as I mentioned, always use some of these tools like your box tool. Let's take a look at the ranges right now. That's your range on Palantir. The consolidation between about 29 and 24. Pretty wide range, about a 15 to 16% range overall. You start getting down below, I would say 22, right here, 23 bucks right there. That's the line in the sand that I would draw right now on it, right below this level right there. 22.64, kind of give it a little bit of breathing room on the downside. Below that, I mean, honestly, you have a pretty significant move to the downside. This stock is loved by a lot of people for a lot of reasons. They look at their contracts, they look at what they've done, but it has not really done a lot since its initial IPO. If you look at this on a long-term basis, clearly trading opportunities abound, but right now it's showing a short. Let's see what else we got. ATO is from ATO. Enter. That didn't work. Oh, my fingers are not working very. Hey, come on, fingers. There we go. ATO, Atmos Energy. All right. So when we look at Atmos Energy, what are we looking at on the chart here? Well, let's see. As I see it, we have some momentum that really spiked out. Very nice. This is right now on the bottom. You're looking at the aileron indicator. Brings together a lot of different momentum and trending indicators to create one consolidated view of overbought, oversold, as well as trend cycles of where it's going, divergence indicators, or movement in trend. So right here, for example, the bottom part of the screen that we're looking at right now. Let's take a look right here, and this bottom part of the screen, we see this momentum start to pick up here within a consolidation. Once you start peaking up over these levels and you start seeing that it's consistently moving higher and bouncing off a low, great opportunity to buy. That move from 88 to 93 right there, and then obviously failed miserably. On a daily basis, you know, where are we right now? It's flat on the day, 93 bucks it's trading at. You're above the line. I would say that really if I was to put my levels that I like right here, I would really like to see it above probably the 93.50 line. So we're right there right now. And then you have some room to the upside and maybe recapture 95. Not a good risk reward playbook that I'm looking at right now. Somebody's asking about GM. It's a beautiful looking chart. No question about that. I mean, and Mari Barrow was on the other day talking about how, hey, you know what? We're just getting started. Obviously, a lot of competition right now coming in for Tesla. That's something with Ford, etc. Some of the shutdowns they have and potential for price hikes that they're going to be able to put in. Cars are hot. A lot of people are moving to the suburbs. They're getting out of the city centers where they don't need to drive in the city centers, and they're moving out to somewhere where they need to drive. So this is kind of good. This is, again, the reverse of the trade that we saw last year. If we take this back, let's look at this. Let's go crazy here and go on a monthly basis. I mean, this thing has been consolidating forever. 2013, you know, from right about here to, well, let's take out this dip right here and let's take out this up, okay? Finally started taking off. If we just exclude this, if we could just cut this right out of the chart, we could say there was this long consolidation and then there was a takeoff right above resistance levels right there. But we're talking about a consolidation from, I can go back to 2014, I guess, and look at this. Consolidation on a monthly basis back from 2014, and we're looking at this range right here. You know, a little bit above, a little bit below, but this range, and then finally broke out. So when we look at this, I think it's a really interesting opportunity. I think that everything speaks really wonderfully for the stock right now for a long-term trade. But, you know, you'll see some backup here and there. Somebody asked me about CCJ. Your uranium stocks have been doing really well. So have all commodity-related stocks, by the way. But CCJ, this is a uranium stock. I believe it's a Canadian-based company, obviously doing very well. We saw that on a daily basis. A little bit of a kickback yesterday when the markets just took down. I would wait for a pullback to get back into this, or if it does convincingly get above its last high, that's something I would look at. We have a little bit, I would call this a weak momentum. See how it's not really significantly, like back here was really good momentum over here, nicely above the, you know, kind of right there, the 40-50 line. It's kind of just been back and forth right now. Not something that I would look at and be all excited about. Just doesn't look exciting to me. All right, let's take a look at some of the stocks that we have also. WSM, really good day yesterday. We saw that there was a breakout to all-time highs on earnings report. Everybody seems to be cooking right now. Now, it's very difficult to get this possibly right off the bat here, but let me show you something. I mean, look at how great this momentum was for a while. We based out, could not get below our level of resistance very convincingly. Every time it popped down, it would come right back up. Pop down, come right back up, like 5 times. So when you see that kind of situation, what you want to do is kind of look at that as, okay, well, that's my line in the sand. $125 or so is kind of the line in the sand that I will work against. Therefore, what I can do is I can start trading against that level. If it does break down and starts getting on close, you know, well below it, hey, maybe I'll kick out because I have the opportunity to move down to about 109, which is my next level. Resistance becomes support. It was resistance and now it becomes support. Well, when you look at this and you kind of check out what's going on right here, you have to agree that there was a curled up from, what's the date here? From the beginning of this year, a consolidation side of a pattern, kind of movement, wide levels of the altimeter where we went from 148 to 126, this wide parameter right here, which again, we can box that out. Just let a look at this right here. And then it got a little skinnier. And what I like to find is these skinny levels, right? These where they're kind of tight, where the three lines are kind of bunched together very nicely. And then look at that as an opportunity to then move into a position, because you'll see oftentimes a springboard, either the short or the long side. So that's what kind of happened here. Consolidated, got tight again, and then once the earnings came out, it just went, gangbusters right there. LAZR, this is, we talked about this before, this consolidation. We saw this move on the up to the down. Right now trading at 26 and change, up a little bit. Came out with some decent earnings. Actually had good news over the last couple of days. I'm not sure why this is not playing a lot better. Looks to me like there is just a, hey, let's just get out of any of these names that are a little bit more growthy and Momo-y. Starting to get this move to the upside here after this drop down. Held support really nicely. Either way, I like the stock. It's from a technical standpoint right now, it's kind of in questionable levels. FedEx currently trading at what? 278. So that's, where is that? Let's see, right about there right now. Earnings came out, blew them away. It was a great earnings number overall. Looks like there was a great upside that was possible. Momentum was solid for a while inside of a consolidation. Again, charts are really messed up right now due to this kind of sell-off that we've seen recently. Nike coming down a little bit, blaming some of their stuff on port congestion. So Nike right now trading a little bit down, about 140 or so. Right at support, by the way, right there. Draw a line, you see it very clearly where that support level is. Just take your tool, put it right about here, and we're right about 140 where all those lines connect. 149.2, right a little bit below that right now. ROBX, which is kind of a new IPO, came out, did really well, just took it all back yesterday, but still at that IPO level. What I like to see is if it can get above that 72 again right now, that would be an area to look at. Silver's been kind of in a consolidation as well from a long period of time. Starting to kind of step up, though, move up from a consolidation that we saw back here, now, to this level, and now consolidation into here, kind of same ranges overall. Look for this as an opportunity if, in fact, we see that there is a real call for inflation, true call for inflation. Gold, just nowhere. Just gold, what a disappointment. We're starting to see it start picking up some momentum from this overdone level on the bottom here. Big move up yesterday, right? During the day, it was a nice little pick right there, but, just nothing glorious. This is another SPAC that got a deal with, I believe it was some financial deal yesterday, I believe it was. I'm not sure what this was. Anyway, point is that there was a nice upside move on this, and that really played out. Kind of coming back a little bit today, as everything does kind of day in, day out. Plug, some bad news on Plug a couple days ago, but it really wasn't that bad in my opinion. This is kind of a line in the sand here. 35 bucks is kind of line in the sand, which is where we're playing right now. So a lot going on right there. Do we have any more stuff here? PIN, P-I-N. Is that PIN? PIN. Invesco India portfolio. Is that what you're looking for? Pinterest or PIN? Who is that? Mike. You looking at PIN? This is India. And it's been holding up pretty well. Just kind of cruising along very nicely. Do I see anything here? I mean, support looks pretty solid. Right about 23.72 on this. Doesn't look like it's a big mover, but it could be, of course. I mean, India is obviously an emerging market. It looks like you have a really good, solid level. I mean, if you look at this from a boxing standpoint, I mean, we have some really good range right there. 23 to nice and tight, nice and long term, going back to the beginning of this year, holding well above. A couple of nips down here on the momentum side, but not terrible. Listen, I want to thank everybody for joining me. Let's see what happens today. I would be looking for being careful in terms of volatility, getting spooked out of the markets. It is going to be a pretty, probably bumpy day overall. I will be here again next Friday. We'll be talking about things. Make sure to go over to the trading app store over at TradeStation to check out all the things that are available on a 10-day free trial. Not to mention that anybody that does become a new subscriber will get a 4-hour free course online. Just email us at support@TriggerCharts.com. Listen, have a great day. Have a successful day. Have a profitable day. Use your disciplines. Use your smarts. Use your indicators. That's what will guide you through this very turbulent time. Thanks a lot for joining me, and I'll see you again next week.